Depending on how you leverage software and capabilities, how dependent you are maybe on one piece of software versus another, I think what's going to happen is everyone's going to step back and say, okay, what are the priority software items? Which ones run the business? How do we make sure that we build greater resilience so that we can address an impact like this or a vulnerability that comes out?
Can I ask why our friendly neighbourhood artificial intelligence in this brave new world that we're hearing so much about didn't save the day and preemptively spot an accident waiting to happen here?
Well, it depends on where companies are with their journey on AI. I mean, I'm sure predictive AI is used in many of the companies that saw an impact here. But that looks at an event, and at this point, the event happened, and so it's hard to take action. And so I think as tools like generative AI become much more pervasive, to be able to assess...
But AI could be a solution in the future.
AI could absolutely be a solution for this, but also capabilities like running digital twins. For example, we just released a software solution called Hypershield, which runs a digital twin at the same time as there's a production. So instead of patching the production environment, you patch the digital twin. You watch the flows of data that's going through the digital twin, and then when you feel comfortable, then you can hit go and move it over to production.
So it's like having a dry run.
You beta the thing, right? And in this case, with CrowdStrike's patch, they did not test it before sending it out.
Yeah.
If somebody pushed send, right?
In today's video, we will examine how artificial intelligence will impact the company and precisely what answers it may offer. So make sure not to miss out. However, before you do, if you'd like to stay up to date on NVIDIA's most recent updates and the most recent news from the stock market, you can subscribe to our channel. We publish daily updates about the biggest shifts in market catalysts. So click the bell icon button to ensure you don't miss the most recent updates. All right, back to today's video. According to 4 people with knowledge of the situation, Nvidia is developing a version of its new flagship AI processors for the Chinese market that would comply with existing export laws from the United States. The Blackwell chip family, which will go into commercial production later this year, was announced by the AI chip behemoth in March. 2 squares of silicon, the size of the company's prior product, are combined in the new CPUs. In the series, the B200 outperforms its predecessor by 30 times on certain tasks, such as providing chatbot responses. The B20 chip, as it is being called informally, will be launched and distributed by Nvidia in collaboration with Inspur, one of its primary distributor partners in China, according to 2 of the people. According to a separate source who spoke with Reuters, shipments of the B20 are scheduled to begin in the second quarter of 2025. The individuals asked not to be named because Nvidia has not yet released a statement to the public. An Nvidia representative declined to comment. Nvidia's stock increased 1.4% to $119.67 in pre-market trading in the United States following the release of the Reuters report. In 2023, Washington strengthened its restrictions on the shipment of advanced semiconductors to China in an effort to thwart supercomputing advancements that would benefit China's armed forces. Since then, Nvidia has created 3 processors with the Chinese market in mind. The introduction of export restrictions, U.S. regulations have allowed startups like Tencent-backed Inflame and Chinese tech behemoth Huawei to gain some traction in the home market for cutting-edge AI chips. The Chinese market would benefit from a Blackwell series processor from Nvidia, which would help the American company combat those obstacles. Due to U.S. sanctions, China's revenue share of Nvidia's revenue decreased to about 17% from 26% 2 years before to the end of January, when delivery of Nvidia's most sophisticated chip for the Chinese market, the H20, started this year. The American company priced it less than a competing chip from Huawei, which caused an early downturn in sales, as Reuters reported in May. Given that this architecture supports some functions like providing responses from chatbots, how will this AI chip shipment affect Nvidia's revenues and share price? Let's dive right in. Greetings to all, and welcome back to Investing Tutorial.
Yeah, I think that statement is slightly misleading. I would say, maybe misrepresenting what exactly happened in the last few decades. I would say, first off, is the U.S. semiconductor company outsourcing manufacturing to other places, and they ended up finding TSMC being low-cost, high-quality manufacturer. But at the same time, the national champion for United States, of course, it's Intel, fell behind. So I wouldn't necessarily say it's Taiwan taking away the advanced manufacturing, semiconductor manufacturing from the U.S. Probably U.S. probably needs to do a lot of catch up. This is why there are CHIPS Act. There are other things that the U.S. is trying to play the catch up here. And of course, the TSMC is also involved in that process. And we'll see what happens. But yeah, that statement is slightly misrepresenting what exactly happened over the last few years.
But Charles, arguably the comments have poured fuel on the fire when you look at the mounting anxieties globally about the concentration of this capacity in Taiwan. So we know that there are these expansion plans, places like Phoenix, Arizona, and also maybe even Japan and Germany. But then we also have seen that that's been a very big learning curve and process for this company. So was there anything that you've sort of seen that gives you confidence about this right now?
Yeah, I mean, supply chain diversification has been happening over the past few years. We're seeing that in things like semiconductor manufacture, the semiconductor packaging. We're actually seeing some of the companies are also setting up plants in the U.S. But on the more advanced, the semiconductor wafer manufacturing, this is exactly where TSMC plays. The progress has been a little bit slow. I mean, there's no denying about that. But we think there's enough government subsidies going into there. But like you said, it takes experience. And the U.S., Europe, I mean, over the years, lost a little bit of that experience in terms of how to do manufacturing right at the low cost. And, well, they are still in that catch-up mode. But there is still the progress. I think let's not only look at the negative side, progress being slow, but there has been progress. But let's give it a few more years. I think there will be more diversification in terms of the overall semiconductor supply chain.
Two sources stated that sales are currently increasing at a quick pace. SemiAnalysis, a research group, estimates that Nvidia will sell over 1 million A20 chips in China this year for a total estimated value of over $12 billion. It is highly anticipated that the United States will persist in exerting pressure on export restrictions linked to semiconductors. According to sources, the United States wants the Netherlands and Japan to further restrict the supply of chip-making equipment to China. According to insiders, the Biden administration is also considering putting restrictions on the most sophisticated AI models, which are the fundamental components of ChatGPT and other artificial intelligence systems. Global chip stocks fell last week following Bloomberg News' report that Biden's administration was considering a proposal known as the Foreign Direct Product Rule, which would give the United States the authority to halt the sale of a product if it was manufactured using technology developed in the United States. Early Monday trading saw a rise in Nvidia shares as investors sought to undo some of the $280 million loss they suffered last week due to rumors of a new AI chip with a focus on China and a positive assessment from a prominent Wall Street analyst. In an effort to circumvent the penalties imposed by the Biden administration last year, which prohibit the shipment of high-end technologies to Beijing, Nvidia, NVDA, has redesigned 3 distinct chips for the Chinese market. According to Reuters on Monday, the company is also developing a version of its B200 chip, which is a component of its new Blackwell line of AI-powered processors that it can sell to Chinese clients without breaking any laws in the United States. According to the tech firm, the new Blackwell GPU architecture, named for the African-American mathematician David Harold Blackwell, uses less energy and offers more customized flexibility than NVIDIA's current Hopper chips, all while performing AI tasks at a speed that is more than twice as fast. China generated about $10.4 billion of NVIDIA's total income last year, but because of the more stringent export regulations, That amount was far less than in prior years. Finance Chief Colette Kress informed investors in late May that the company's data center revenue in China is substantially lower than it was before the new export control limitations were put in place in October. We anticipate continued fierce competition in the Chinese market. Every country is paying attention to the significance of AI, she continued. We increased the volume of newly developed products that are exclusive to China and don't need an export control license. Prior to the SIGGRAPH conference, which takes place this weekend and brings together yearly attendees interested in computer graphics and interactive technologies, Citi analyst Atif Malik placed Nvidia on what the bank refers to as a positive catalyst watch for the next 30 days. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks, enjoy a limited-time 8.1% APY on idle cash for 3 months, and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video.
Jim, will you stick around for just a minute? We want to just get more on the market implications, bringing in Shannon Sakosha. She's Chief Investment Officer at NB Private Wealth, along with fast money trader Steve Grasso, who is the CEO of Grasso Global. Steve, are you trading right now? Are you making any moves on the back of this, or just what are your thoughts?
Yeah, Jim touches on a lot of important points, and you started off leading with, does that small cap trade unwind? So the small cap trade, Kelly, it was obviously driven by the idea that the market finally agreed that rates were moving lower in probably the near term. And on the back of the horrible Biden debate, Trump's odds of being president went through the roof. So you had both those things coupled together, rally the overall market. And the small caps have underperformed for such a great length that it had to reverse at some point, and people got blue in the face waiting for it. But I think that you're going to see this time period where maybe a little consolidation, but I think it's going to reverse, and that money will be put back into the Mag 7, or as Jim just coined a new word, the Mega 7. So if you wind up having those names really start to fuel, we're only 30 days out of the Democrats' convention, and we're only 100 and some odd days out of the election. So you're really looking at feet to the flame. Last thing, I think it's really interesting how President Obama, who is the patriarch of the Democrats, as Trump is to the Republicans, doesn't really talk about Kamala Harris. He talks about an outstanding candidate. So I think we're in for a lot more volatility, but I agree with the previous statements. This is just going to be the extension, if not a push further left, for the Democrats' agenda.
In a different analysis, Citi researchers stated, "We are still extremely bullish about semis. We spoke with investors in New York and Connecticut during the past week. Broadcom is catching up to Nvidia as the stock with the best sentiment stays at that position." Malik, who maintained his $150 price target and buy rating for Nvidia, stated that he expects potential insights into how Nvidia clients will monetize their billions in capital spending, A key topic on investors' minds these days, from CEOs Jensen Huang and Mark Zuckerberg of Meta Platforms. The investment is a reflection of their clients' efforts to use their vast databases to boost sales of everything from the most complex pharmaceutical testing to drive-through restaurants. We anticipate hearing about an upward trend in AI demand at the conference, with no indications of a slowdown, and we see the recent stock decline due to geopolitical fears as a chance to purchase. Malik and his colleagues wrote, analysts had expressed concern that a delay in the release of the new Blackwell offering and the existing H100 chips would result in an air pocket in revenue if customers canceled reservations for the older chips and bided their time for the upgraded system. Pre-market trading saw an 18% increase in Nvidia shares, pointing to an opening bell price of $120.08 per share on Monday. With all of these considerations, Nvidia is unquestionably a great buy, especially if you're looking to invest for the long term because the company hasn't reached its full potential yet. What do you think about Nvidia stock? Is it a good buy at the current price? Please share your opinions with us in the comments section, and don't forget to let us know what you think NVDA is worth. If you're interested in learning what other companies like Nvidia have been up to lately, click on the next video on your screen. We'll see you there.